Hello and welcome back to another day of charting. Today is going to be a review for the last calendar day of the month and for the year. So what's important about today is that we are closing out the worst quarter since March of 2020. So if you're feeling a little bit uneasy or if you notice that trading's been difficult, don't feel bad. This has been one of the hardest starts of the year in history. And like I said, this has been the worst quarter in 2 years. So if it's been difficult to trade, don't feel bad. We're going to walk you through what happened today and try to explain and see how we can be prepared for the rest of the week. We also have options expiry, which we're going to review in a moment here. We got stocks rebalancing. And as you can note here, we got Apple up. I'll talk about that in a moment as well. We're going to look at monthly charts to see where we're closing out. And we're going to see whether or not the TINA alternative is still in play. Also important to note, we're going to be on for a live stream on Friday. So if you have questions, you want to come hang out, come on Friday. The stream is already scheduled on the channel. So where I want to start today is by looking at the options that expired. So as we look over here, what I want to point out is just that there's been some very important levels that we can look at here. We're looking at SPX, which is going to be the index for the S&P 500. And what I would note would just be these areas over here. So we can look at the strikes and we can see that they've been buying. Remember that SPX is going to be 10 times bigger than SPY. So when you see 25,000 here, that is equivalent of $250,000 or 250,000 on SPY. So all these areas here, again, that's the equivalent of 150K, 100K, 350K, 120K, 260K, 120K. These are big numbers. And we know that this spread right here between 45.10 and 45.20, which we can see by the open interest over here, has been steady. They were able to walk it a lot closer, but not quite get within that range. By getting here to 4510, they would have actually been at the bottom end of that straddle. So, sorry, the spread. So in terms of this, again, we understand what happened. There's an overwhelming amount of puts. People want to stomp the chart. They did. This is the day to do it. Why? There's all of the volume. So this is SPX. And again, this is what happened today, right? Tons of puts. So that's the first thing. Second thing we're going to look at is going to be, is this the one for today? That's for tomorrow. Here's SPY. So this is going to be SPY, and we can just note that between 457 and 450, again, tremendous amount of puts. But I still think that the put flow on SPX is larger than what we see here on SPY. Just note that, again, between 457 and 450, they got the minted for the first time in a while, and they got the chart below 1%. All these calls got smoked. I just want to look forward here to Friday and just get a preview for whether or not we're going to see continuation. So what I am noticing is that we got a 457, 455 put spread, and then we got a 458, 460 call spread. And the open interest is here at 455 and over here at 460. So if they torch the one side, maybe they're going to try to torch the other side now. And all this means is that we can understand where the price action went today based on that. Second thing I want to review is just going to be the actual rebalancing. There was a $10 billion MOC or market on close, which means that there are people who are buying and selling stocks right into the close. What I would just note here is looking at Apple, we're looking at a 15-minute chart. So as violent as the move down was into the close, we look at the volume here and we note that the bar is massive. Like, don't get me wrong, it's huge, right? Let's look and see how much volume that was. It was 15 million shares. However, into the close, we see that there's an even bigger bar. It's a green one. So the green one is bigger than the red one. And the reason why that matters is because that's the rebalancing. So what we were trying to talk about yesterday into the close was that if someone is trying to buy Apple, by spending money to get it down, they're able to buy all these shares here cheaper after hours. So that's part of the motivation for today. We're going to look at the big stocks and just note that we got this exact same pattern here where we note that the close had a lot of volume, but after hours had even more. So again, look over here. Do you notice a bar that's even bigger than that one? I don't. That's the biggest one. It's by far the biggest bar. We're going to look at the biggest companies here. So let's look at Tesla next. I actually didn't preview this one. And I'm recording this at 4:18 Eastern. So that just means that there might still be more volume that comes through after the close. But generally speaking, by 4:15, it's all settled out. Look here. Bigger, biggest. So for Tesla, we got more buying into the close than we did, after hours than we did into the close. Let's look at Microsoft next. Ooh, look at that. Yeah, look at that. Twice as big for the buys and the sells. Fully reversed the move as well. Nice. Let's look at Amazon. Same thing here, right? As big as that sell was into the close, it is dramatically bigger after. We got 228,000 into the close, and we got 600,000 in after hours. So all this tells me is that there is dramatic buying after the close. They walk it down so they can buy it. Why? Because there's a market on close, and the book is told ahead of time. So the rebalancing is very important for today. Can't ignore it. What I want to shift to now is going to be looking at whether or not anything has dramatically changed, because I got a feeling that people are going to be thumping their chests for the Bears today. They're going to be loud and proud and say that, I told you so. I told you. I don't know. I think it might be a little bit premature. All you guys managed to do was to walk us down by 2 points to 51. Not all that impressive, to be honest. Looking over here, too, the support and resistance, which we did preview earlier. Again, we have to keep in mind that the bulls got us all the way here to 460, and then into the close, we're closing at, what do we close on SPY here? 452, right? Technically, on the close, we closed at 45164 with the MOC. So we're up by 1.5 points in after hours, but what's important to note is just that we're closing here at center field. So is that a win? By the way, it's not. So we're back to center field after the Bulls scored a touchdown. The Bears have yet to score points on the board. So what does that mean? It means the Bulls are still in control. Are they going to remain in control? I don't know. But as of right now, I still believe they're in control. I personally also take advantage of the rebalancing and liquidity today to put significant dollars to work. I think I initiated 2 new stocks, and I was a little bit trigger happy today. I bought a lot. I was buying all day. I cannot believe the discounts being offered. And there are definitely some stronger stocks than others. And if you're able to sift through, or have something like an algo, which can tell you what is a strong stock and what is not, that gives you the edge, which is what we're always looking for. So again, in my opinion, we went from center field when we started the week off. We went to resistance 3. Now we're backing off here to center field. Where we go from here, that's going to depend on the follow through for tomorrow. We are getting some early warning signs, like we talked about yesterday, that if the Bears do want to take control, all they got to do is continue us lower. So we can note here that now we have a change in pattern. So we got 3 bars here with 2 lower highs and 2 lower lows. That would be the start of a trend change on the daily. Why? Well, we stopped going up, we started going sideways, and now we're going down temporarily. We can revise this uptrend to see that we're still technically going up. We just got to find the uptrend which is going to match it. So the more you revise the uptrend, it just means that you're not as predictable. So again, here's the downtrend, which shows we were going down, we stopped going down, we went up, and in my opinion, we're still going up. Most important area for me is going to be 44892, which goes back to our monthly low, and that's really close to where we are now. So again, we got 4489. That is going to be the December low. Now, if we flip over here to the weekly chart, here's where things start to get a little bit more bearish. So we can note that we closed out last week at 45269. On a closing basis, we're down by about 1 point. But again, in after hours, we're back above the green on the week. This is not a nice candle. It does not look good at all. So this right here is a reversal candle. It's a dragonfly doji. Gravetone doji. So we don't like seeing these. It's not nice at all. Where we go from here, I don't know. But that's where that 44892 area comes from. We hit the red line, backing off to the weekly pivot. What's more important to me is going to be the monthly chart. So let's look at this and try to see whether or not was I on the right chart here? That's the weekly one. My apologies. So here's the weekly chart, right? We note that we had a falling wedge. We broke bullish, right? Higher highs, higher lows. We're just below the 454.05 neckline here. So important area to watch. But on the monthly chart, we can note here that, again, we stopped going down. When we open up this new candle, I would still say that this is bullish. Why? Well, on a monthly perspective, we got 1, 2, 3, 4 months of dip buying. I would still call this a hammer, right? It's a little bit more of a spinning top, but I would call it a hammer. And what's really important here is that during the month, we advanced by about 11%. And as of right now, we're off by about 2.2%. So again, 10 steps forward, 2 steps back. I'm going to give a shout out here to Mark Minovini from Twitter. And again, this is a market wizard. He's smarter than I am. What he was talking about is that in the potentially new bull market, what we're looking for are pullbacks that are going to be up to, let me actually pull up the quote here. 1 second. I want to show this because I think it's quite relevant. So again, you can go follow him on Twitter if you want to, but the lockout rally. So during the first few months of a new bull market, you should see multiple waves of stocks emerging in new high ground. Again, we noted that We see stocks like Expedia, Deere, Walmart, Costco, all at all-time highs. Apple really close. So again, we're seeing that emerge. General market pullbacks will be minimal, usually contained to just a few percent from peak to trough. Many inexperienced investors are unwilling to buy during the initial leg of a new powerful bull market because the market appears to be overbought, which it does right now, by the way. Typically, the early phase of a move off of an important bottom has the characteristics of a lockout rally. During the lockout period, investors wait for an opportunity to enter the market on a pullback, but the pullback never comes. It did today. Instead, demand is so strong that the market moves steadily higher, ignoring overbought readings. As a result, investors are essentially locked out of the market. If the major market indexes ignore an extremely overbought condition after a bear market declines or correction, and your list of leaders expands, this should be viewed as a sign of strength. That's what I'm personally seeing. To determine if the rally is real, up days should be accompanied by increasing volume, whereas down days should be on lower overall market volume. So let's have a look and see what the daily charts tell us. So here on S&P, oh, weird. Look at that. So, So we're basically leveling off here. On the up day, we got 86.5 million shares traded. On the down day, 79.6. And then we got 76.1. So what is that? That's a decrease on low volume. That's exactly what we note right here. My personal watch list, I closed down by 0.1% today. I was green to the close. I got a little bit cocky, and then the market humbled me as usual. So I'm closing down by about 0.1%. It does not hurt my feelings whatsoever. Why? I'm in this market for the long term, and I'm seeing everything I want to remain bullish. Doesn't mean you should see everything you want to remain bullish. So if we flip back here and have a look at the quote here where it tells us that usually contained to a few percent from peak to trough. Pullback should be shallow and minimal. What do we have so far here? Well, we got about 2.2%. For us to fall back down to the 200 DMA, it's about 3%. I would say that's a pretty right. That's a dip. 2.5 to 5% would be a dip. For us to get back down here to the 50 DMA, we need about 5% lower. It's also important to note that that is my support 3. So for me, as long as we remain above the 50-day moving average and the 50 weekly moving average, which are both at 442.75, this is a very important area because it basically tells us that if this quote is correct, the 50 daily and the 50 weekly should be strong support. And if this was only, again, an options thing and a quarterly rebalancing and expiry thing, we should see the move resume back up, if not tomorrow, shortly after. Here's what I'm looking for. And again, I encourage you to watch the video, which will queue up at the end of the video, end of the video here if you want to know more about my bull thesis. But there's a few areas I'll be watching specifically. So we're going to open up a new candle here. As we noted, it was the worst close since March of 2020. So that's this period right here, just like we did in 2018. And we've been looking at for quite some time. And what we note here is that we gap down, pump up. Here we gap down, pump up. So by closing at the low of the day, we are actually set up to potentially get a gap down. Where can we gap down to? Anywhere lower here. A 1% gap down is what we got the last times roughly. So a 1% gap down from here would be almost exactly on that 200 DMA. How we react to it, I don't know. If it happens, I don't know. Me personally, I'll be buying it. And again, using the 50 DMA here and the 50 weekly as my stop loss area. So as long as those conditions remain, I am a net buyer and I am bullish on the market. So what's really important too is just how we are characterizing the move here. So even though all the selling here happened and it's actually lower than yesterday, there was a dramatic sell into the close. So what we look at here is that pink pivot we were looking at, again, going back to 456.6, and that area comes from our weekly chart right here, where again, on this week, which was the start of the decline, it's 456.6 is the low. That's where it comes from if you're not sure. Over here, we got our high, roughly 458. But anyways, going back to the hour, we can note that we were dancing on it for a long time, right? We fill the gap, and then they drill it into the close. And in my opinion, the drilling was largely due to them wanting to actually buy, not sell. As we're settling here a little bit more in after hours, again, is the green bar bigger than the red one? Yes. So everything they sold took us down, took us down by about 1% on Apple, and then all the buying only took us up by about, 0.35 or a third of the move. So spend this many shares to get it down and then get all these shares on the cheap. Nice. That's exactly what I believe is happening. Am I right? I don't know. All we do is give our best guess in terms of where we think we're going to go going forward. So we can also know we stopped going up, right? Stopped going up, started going sideways. Now we're starting to go down. So we do want to see that downtrend break by getting back above decisively over 456.6, reclaim those areas. Last thing I would note here is that our 3 white soldier pattern is getting invalidated here. We only have 1 session left for the rest of the week. And where we close here is going to be really, really important for me. So I want to see us at least get green on the week. And because we're looking for potentially a gap down or a move lower tomorrow because we're closing at the low of the day, I am going to be looking for next Friday as the catalyst for us to be higher. Notably, minimum back above 45804, but I'm looking at 45818 specifically too. I'm looking here at the monthly chart and I'm looking at the February high, 45812. So again, that goes back here to our, where's our key levels here? So, right, 45813 would be a monthly higher high. So now we have to reclaim resistance 1 and resistance 2. Those are going to be very important for me going into the weekly close of next week. And the reason I'm saying next week and not this week is because looking back at our quarterly chart, going back to our quarter here, that means that we're going to potentially be getting that gap down. But if we don't actually rally into the close, oh, GameStop announces a stock split. Stock is up 10%. Nice. The gap down. And if we're actually going to be getting, again, each one of these candles is going to be 3 months. That's 1, 2, 3, 4, or 1 year. Here we go. 1, 2, 3, 4, 5, 6, 7, or right, almost 2 months worth of rallying, right? We're looking at 7 quarters. So if we're going to be looking at an expansion here, I would rather still be long and wrong than trying to bet against the market here. So we got a massive hammer, which means dip buying. And then if we're going to be actually self-fulfilling and rallying here, what I need to see, again, keyword there being need, not want. I need for us to be higher into next Friday, which means that the momentum is still building up and the pressure is releasing. Otherwise, we could go back down for a retest of the lows. And the confirmation for me would come on a pierce of the 50 daily moving average back below 440. But on a confirmation, it would be by closing below the 50 weekly moving average for next week at roughly 443. So if those conditions meet, that is how I would be flipping from bull to bear. So the monthly bottom, we completed the monthly bottom. We're closing closer to the high than to the low. 11% up, 2% back. That's bullish for me. We've been getting a lot of whipsaws on the geopolitics, and what's really important for me is that even though we heard back and forth all day about are we paying in rubles, are we paying in euros, are we paying in dollars, are we even going to get gas? What happened? Basically nothing. It's just the close that happened with the volume, with the options motivation, and other than that, in my opinion, it was just a thing for the close. If we're going to get follow through, these bears better show up, and they better get us back down here into fear because this is not really impressive. Low volume, big dramatic move just means people are on edge. If we get a gap down pump up tomorrow, I am buying. In terms of the surprises, that's where I'm not sure. We've been seeing some posturing from from China, and those are the big events for tomorrow. So we got payroll Friday, we got a new month and quarter opening up, and then we also got the European and China summit, which is going to be virtual. I'd also note we got CPI coming out on the 11th, and then on the 14th. The 15th is actually a holiday. On the 14th, we're likely going to have the Fed meeting minutes, and then we also have the options expiry for April on the 14th. Very unusual. I don't think in my career I've seen an options expiry land on a Thursday. It's just because we're closed. I believe it's Good Friday. So that's the reason why. I'd also just note here, as I mentioned, I believe it was yesterday or the day before, that as a bull in this market, I was looking for a specific recipe to continue to want to be bullish. And as of right now, I still see it all. There's some early warning signs. The bears are flexing, but I still believe the bulls are in control. So as of right now, right, Tina, we can look here and see that the inflation narrative is real. Everyone's talking about it. We'll see that CPI print on the 11th. We'll see what the reaction is. Here we go. Test up to 454.05 on SPY. We did. We went all the way to 460. Bulls and bears fight for direction. The bulls had the edge up until the last hour, where, again, the bears did take short-term control of the chart, drilled us down by more than 1% on the NASDAQ and on SPY. OPEX to quarterly chop. You got it. I was already looking for that 45.10 as a potential target on SPX, and they actually managed to torch that thing. April, relief rally on quarterly chart. That's it. And one more thing I want to quickly look at here, just for my own personal curiosity, is QQQ. So looking here at QQQ, right, the Qs, we can note here that we went up by about 17%, and we're only up by 14.2 into the close here. So from peak to trough, we're down by about 2.3. I would use those same percentages for QQQ, maybe a little bit closer to 5 instead of 2 for the move lower. And then on a weekly on a weekly perspective, we're just below the 50 weekly here, but we're still green on the week. And again, in a liquidity-driven rally, what we're looking for is chips leading tech leading SPY. So the fact that QQQ remains green on the week tells me that these bulls are still good. They're still solid. I do want to see us back above that 50 weekly for tomorrow. We can note that we are above here in after hours at 363. On the daily chart, here is where, again, the gap is now filled, and the reaction here is going to be very important. Apple filled its hole, right? Tesla, sorry, I don't know if Tesla did. We're not going to look at that today. It's already a little bit late on the video, so that's it. Very last thing I want to look at here is going to be the heat map, because I think that if you ignore what happened on the 1 day here, because again, it's red everywhere, right? It's red. It was the last hour. It wasn't the whole day. But if we zoom out for the last 1 week, oh my goodness, it's still bright green. Yes, even with the decline today, it's bright green. Why? We're closing at the high of the month. Looking back at the last 1 month, there we go, right? Still bright green everywhere, which means the last 30 days or month to date, it has been bright green. And looking at the last 3 months, this is where we can note that there's a whole bunch of nothing happening for the trillion-dollar companies. And in terms of window dressing, we're going to find out whether or not there's going to be that follow-through going into tomorrow, but then into next week, as we noted on the video yesterday. So finally, as we talked about, we're going to be doing a live stream for tomorrow. And if you're interested in watching more about my bull thesis in terms of how we got prepared for this week, what we were looking for, I encourage you to watch the video, which we'll keep up here in a moment, to see where we prepared our notes. And if nothing else, I wish you all the best of luck. Whether you are bullish or bearish, please make sure you have a plan and stick to it. Best of luck. See you tomorrow.